consolidating right at that 30 to 31,000 level before breaking lower. So it makes sense that it's going to be hard to push back through that level. And in fact, it's given us a couple good shorting opportunities on Bitcoin throughout the pullbacks off of that level. Now, if we take a look at what's currently going on, you've now established price over the last week between 31,000 and 30,000. The reason that's important is because, number one, as long as it stays in that range, it has a positive bias to the upside.
Gareth Soloway, chief market strategist and CFO of In the Money Stocks, recently tweeted that interest rates would increase. Jerome Powell may need to continue increasing in light of recent positive consumer confidence and housing data, he said. In June, with renewed labor market optimism, consumer confidence rose to its highest level in almost 1.5 years. Meanwhile, business expenditure appeared to maintain steady in May, suggesting the economy was still on firm ground despite recession fears. Other reports on Tuesday that indicated a housing market recovery also helped to raise confidence that the economy could escape a collapse in the near future. With home sales soaring to a 15-month high in May and monthly home prices climbing once more in April, revival was probably already underway. The positive numbers, however, indicated that the Federal Reserve will probably need to keep hiking interest rates in order to slow overall economic demand. The U.S. Central Bank warned this month that 2 additional rate hikes were necessary after increasing its benchmark rate by 500 basis points since March 2022. This season, Gareth Soloway also offers his opinions on the future course of Bitcoin, stating that if values stay where they are, a decline may occur, but a turnaround would result in an uptrend from where it is now. It also offers his opinions on gold and what to anticipate in light of recent employment and other statistics. Please remember to use the like button, subscribe, and leave comments as you watch the video.
So we're going to take a look at the Bitcoin chart. We're going to talk a little bit about the technicals, the dominance, everything that's going on here. What are the probabilities that we're going to break out versus what are the probabilities that we're going to collapse back down? So let's take a look right off the bat at the technicals and chart of Bitcoin. So what we've seen is Bitcoin rallied all the way up, retesting this double top. All right, so this is the double top high pivot from the 14th of April. We retested it on the 23rd of June here. Now, if I zoom out, the reason that trend line has been so impressive in terms of its resistance is because it goes all the way back to this area here. So if you're looking at the 2021 cycle, this was a low pivot before the big move up. It came down, it hammered on it multiple times. It then went up again, coming down again, and then eventually falling, consolidating right at that 30 to 31,000 level before breaking lower. So it makes sense that it's going to be hard to push back through that level. And in fact, it's given us a couple good shorting opportunities on Bitcoin throughout the pullbacks off of that level. Now, if we take a look at what's currently going on, you've now established price over the last week between 31,000 and 30,000. The reason that's important is because, number one, as long as it stays in that range, it has a positive bias to the upside. So again, a positive bias to the upside as long as you stay sideways above 30,000. If it breaks 31,000 and confirms, you want to see it stay above that level for about 5 trading days. Then you can say, okay, we're headed higher. We're most likely headed to our next target. Where's the next target to the upside? There'll be a little resistance at this pivot low area right here, and this one right here. That's at 34,500, give or take 35,000. And then this one upsloping would be my next target at around 44,800. We'll call it 45,000. Now, that's the bull case. If 30,000 does not hold, if we have a daily close below 30,000, psychologically, that's going to do a lot of damage to the charts. And you may see a drop to 28. If 28 breaks, 26 is your next stop here. If 26 breaks, then you could be talking about heading all the way back to 20,000 or the lows of 15,700. So basically summarizing here on the Bitcoin chart, the key is it needs to stay above 30,000 on a daily closing basis. Now, remember, that's a daily closing basis. So again, intraday, if it pierces, that doesn't matter. It can be rescued. Daily closing basis above 30,000, the bias is bullish right now near term. I'm only talking near term here. We'll have to see where it goes from there on out. But let's see. If it closes below 30,000, watch out below. You may see a big sell-off. Lastly, folks, I want to show the Bitcoin dominance chart. And again, BTC.D is the Bitcoin dominance chart. And what we could see clearly here, this was resistance all the way along here, hammering on that 49% level. Once it broke out, you can see the move. Now it's at 52%. Where is Bitcoin dominance going to go? You're talking about 57 to 60% dominance. Now, again, the key on this is understanding that it doesn't necessarily guarantee Bitcoin is going to go up. It might tell us that Bitcoin is going to come down a little bit, but altcoins are going to fall much, much more, which in all fairness is part of why Bitcoin dominance has gained. We've seen altcoins collapsing while Bitcoin has stayed relatively strong. So again, that's a key there on the Bitcoin dominance chart. I just want you guys fully aware of everything going on with Bitcoin, the technicals of the chart. The jobless claims numbers came out at 226,000. That was actually a much lower number than expected. Now, in terms of jobless claims, to understand it completely, jobless claims are how many people are filing for unemployment. So the lower the number, the stronger the general economy would be assumed to be. After 3 prior weeks at above 260,000, to drop to 226 is showing relative strength in the economy. You combine that with a revised GDP number that was 2%, much better than expected. You have a recipe here for a Federal Reserve that is going to be hiking next meeting, which is in late July, and likely will be at least hiking one more time the remainder of the year. Now, if we take a look at the charts, I want to show you the gold chart here, guys. This is a big one. So look at the gold chart and look at what initially happened. In fact, let's flip over to the 10-minute chart. After that economic data, we saw a flush here on gold and then a full reversal. When you see this in the charts and you get a full reversal, that is very, very bullish. It means that big money was scooping up the panicked sellers here and they were driving it up. Now notice how you're consolidating. That's what we would refer to as bullish consolidation. So if we go to the gold daily chart, we can also see that there was a pivot high here connected to this point, and this was the target that I gave. I said you have to retrace to the scene of the crime. The scene of the crime here, we have a pivot high, breakout, return to the scene of the crime would be returning to that same trend line, and that's where you look for buyers to come in. What happens today, folks? Buyers come in. This, to me, if you ask me, I'm going to go out on a limb and say this is probably the near-term low on gold. The next move will be up and retesting that triple top high, and I do think by year end, and here's your triple top high, guys. Look at that. 1, 2, and 3. By the end of this year, we will be above this line, maybe even significantly. I think this is, again, the beginning of the next bull move in gold. So that's your gold analysis. Really interesting price action today. I do hope you all have a wonderful rest of your day, and I, of course, will talk to you soon.
Chinese authorities banned the use of Micron goods on hot infrastructure projects this month on the grounds that the chips represent a major threat to cybersecurity. The U.S. Commerce Department harshly denounced this action, which was perceived as a reaction to the Biden administration's export guidelines. In the continuing political tensions between the United States and China, technology and semiconductors have become major topics. Through export restrictions, the U.S. and its allies are attempting to stop China from obtaining advanced Western chips. Chinese observers have remarked that these limitations may be achieving the desired effect, and have cautioned that they may significantly hinder China's ambitions to develop advanced artificial intelligence, AI, technology, and chips. According to HSBC Asset Management, the U.S. will enter a recession in the fourth quarter of this year and linger there until 2024. In addition, the Eurozone's GDP will contract next year, joining that of the U.S. The good news is that this projection predicts rapid decreases in inflation and that the Federal Reserve will drop interest rates by the end of the year. According to Christine Lagarde, head of the European Central Bank, inflation in the Eurozone is still too high and is expected to stay that way for an excessively long time. The region's headline inflation rate in May was 6.1%, down from April's figure of 7%, but still 3 times the European Central Bank's aim of 2%. Lagarde cautioned that it is doubtful the ECB will halt rates, much less decrease them, anytime soon. Recession, 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 the calls are so loud you can still hear them even if you cover your ears. Here is Joseph, a young global chief strategist at HSBC Asset Management, who predicts that the upcoming recession will be more like the one in the early 1990s. We anticipate a more difficult environment for equities given the sluggish economy and a potential recession, beginning in 4Q23 or 1Q24, with our central scenario being a 1 to 2% decline in GDP, according to JP Morgan Chase's top strategist Marko Kolanovic. Bob Post Group Chief Executive Officer Seth Klarman, the Fed wants to cool off the economy, and one method to achieve so is to start a recession. Perhaps the catastrophe will occur in the first half of 2024, but recent economic data from the US revealed a strong economy that, with any chance, might eventually defy those forecasts. What do you anticipate it will be? Is there or is there not a recession? Post your comments in the space provided below and let us know what you think. Also, don't forget to like, subscribe, and enable notifications for our next videos. Thank you for watching.